Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with our euro analysis. So today it was a bit specific weekly report because there we take some interesting role that is not usual for us. Usually we're trying to follow the conception of the Fed Reserve and European Central Bank, trying to anticipate further decision and what really could happen. But in the current situation, I can't match the policy and the recent statement with the real statistics that we have in the United States economy. So as I said previously, I have real doubts that the situation stands as bad as it was announced, and I suspect that the Fed could play some different game in the current situation. So all the stuff and the background of my thoughts I put in the weekly report. So and I think that currently the first stage in analysis of the euro currency relates to Fed policy. So the technical situation that we have here in this recent rally, it's not really very interesting. It's not really surprising because markets just hew to Fed promises. And we see corresponding reaction in the markets. At the same time, the major question stands in whether the Fed policy is real stands so as they have announced. Because I have real doubts and suspicions that some different game is playing by the Fed right now. If you will take a look at the statistics that you have the unemployment on record lows. You have the consumption on the record high. So this unprecedented consumption right now stands in sales, hits all records right now in the United States. We have healthy inflation in the wages. So, and it stands above the 3% since the beginning of the 2019. You have the good gross domestic product data, at least in the first quarter. This combination, you have the stock market on the record high, and this combination suggests the overheating of the economy. And the reducing rate in the current circumstances, as at least Fed trying to create the visuality of. So they speak about the possible rate cut. And the rate cut in the current circumstances could lead just to collapse. So economy is absolutely overheated, and the inflation will be out of the control. Maybe not now, but within the perspective of the half of the year probably. And this could be a really big bubble blow of the stock market. That's really something. So the only way how I could combine the Fed policy with the overall statistics that I see is just Fed is killing the clock. So they just trying to get the time, because I suppose that they already see, or maybe they know for sure already, the changing statistics, and this could lead the Fed to change the rhetoric. Currently, they just trying to calm down the markets and tell what they want to, killing the clock. And I suggest that the policy should change as soon as we will get the clear changes in the statistics in the United States. And this leads me to the conclusion that as Fed can't just follow the rate hike cycle, because it contradicts the expectation of the markets, and that could lead to acceleration of the money outflow from the stock market and will may cause the collapse on the stock market. I think that the Fed will not cut the rate in July. They just will not fulfill their promising, and that will lead to the not as loud effect as to continue rate increase. So, well, we will not cut the rate in the July. Well, maybe we will cut in the September. So it will be just more smooth negative effect on the market. That's my suggestion. So we'll see. And currently, guys, I think that the July meeting stands in focus, and that will it will bring the clarity whether we are correct in our expectation or Fed indeed takes the step in the direction of the rate cut. So that's our strategical moments. If you would like to know the background, why I think so, what stands beyond it, you just read the weekly report. On the technical side, its situation is more simple because, as you can see, market just following the promising of the Fed. We see the rally on the euro, and we're keep going with our head and shoulders pattern that we have discussed. On Friday, we said that market should hit the COP, and that has happened, and market even continued upward action. So we see this acceleration above the COP, so no major reaction has followed on the COP target. Now, take a look, market entering the confidence resistance on daily chart, 1376, 1394. And we are following with this ABCD pattern. OP stands at 1413 area, slightly above the confidence. Market also stands in the overbought. Our strategical target here stands on the weekly, and this is confidence resistance around 1550, 1650 area on the weekly chart. So all this stuff we also talked about in the weekly report. On the daily, this ABCD pattern creates the XOP in agreement with the same area, because this is neckline over the large weekly and shoulders pattern. But this is not very interesting on the common wick because it stands beyond the overbought. It's more interesting for us what will happen around the OP in the current area. There are two scenarios that we suggest on the common wick. First, market hits the OP first, starts retracement second, or first market will show a minor pullback just to leave the overbought condition, and then we'll hit the OP. Depending on what scenario will be chosen, it will be different depth of the retracement. So if the OP will be hit first, then we anticipate and expect the retracement will be more significant. If market first will turn to retracement, we think that it will be small, and then market will continue right up action to the OP. That's two major points to watch for. On the intraday charts, we do not have any patterns at all, and the only that we could get on the intraday charts is just the fib levels. So first one is 13 even on the 4-day from chart that coincides with the pivot. These guys, I suppose, will be the vital signal area for euro currency, because if market indeed stands as bullish as it seems, it should not break this area. So we could accept a retracement here after the OP will be hit, but it should not be broken. So this level should hold to keep the overall bullish context and to keep the bullish scenario that we have. So that will be the vital area for common wick. It's 1255, 1277 confidence support. On the hourly chart, we have also local OP target here, this ABCD pattern, and actually it agrees with the daily one. And also we have some additional levels. First one, you can see that 13 even is also a confidence on the hourly chart, and it coincides with the actual neckline that we have here. 1336 is the nearest fib support, and this will be enough. If market will drop to the 1336, it will be enough to abandon the daily overbought. So it means that if market starts new day with a retracement, keep watching for this level or that one with the further continuation to the 1413 area to the OP target. If market will accelerate on Monday, then keep watching for hitting OP and then retracement to the 13 even or confidence support here. So that's the scenario that we keep watching. Currently, in this moment, guys, the situation is not suitable as for a bearish trade as for a bullish, because speaking on the bullish trade, market stands overbought, and it's some retracement should happen before taking a long position. At the same time, it's too early to take a short position because we have the major and completed target above the market, and it's not enough background, not enough in the context for taking the short position. Besides, we do not have any clear bearish reversal patterns. So that's why we probably will get both signals on the common wick. First, I suppose we could get some bullish continuation patterns here or here that would let us to continue to OP. Once OP will be hit, maybe some short-term bearish pattern will be formed that trigger retracement. So that's two scenarios that we will keep an eye on common wick. But that is mostly tactical, our major intrigue, our major interest stands around the July Fed meeting, and because that will be the answer on major question what to expect in a long-term perspective. If Fed will not cut the rate in July, it will mean that our suggestion is correct, and Fed just deceiving the markets, trying to smooth effect from the following the hawkish policy. So that is really will be a very important moment.